to the Trading Market Technicals morning call video for Wednesday, January 15th. Nice update in the markets. Dow Jones up 115, Nasdaq up 69, S&P up almost 20 points, and the Russell up $15. And most of the gains that we had yesterday were pretty substantial. Actually, it was a very important because we actually closed below the 20-day moving average on all of the indices that I showed you in this video. So another close below that I think would have induced more selling, but we did take most of the losses back from the previous day, so that's actually a good sign. So we want to say, okay, does this have legs to challenge the highs? And I always, like I said, one day doesn't make a trend, and even though we had a pretty nasty day the other day, we're still in an uptrend, and you have to really plan your trading around that. And it's really interesting to see what's going to happen. Like I said, volatility is picking up, and when volatility does pick up, that is a sign that we are going to actually break out and or break down. I mean, obviously the trend is up, so I'm looking for at least to challenge the highs here before we actually start selling off again. Okay, but anything can happen, so let's just be nimble. There's going to be a lot of good opportunity out there, and like I said, we are starting to pick up. Volatility's coming in. Volumes coming into the marketplace, so I'm really excited about the next few weeks and few months actually. All right, so let's go into a couple of indicators. I'm not going to show you much. Most of the indicators are still pointing for higher prices. Just wanted to let you know. But we're going to talk about the E-minis and the Japanese yen in a couple minutes. The tick is above zero, looking quite good here. No need to fight it again. Like I said, long as we remain above zero, and we can get one of these quick flashes down, but we need to really get back up, and that hasn't happened obviously since beginning of December. So looking really constructive here as far as the tick goes. Now, the dollar is what I'm really going to be watching because I like to trade the commodities, and as you can see here, we did really just kind of eked out a small gain. Where are we up? 12 cents. So the dollar really isn't taking off, really doing much. So if the dollar can kind of just be soft-toned, kind of stay around here, maybe start breaking down a little bit, that's going to help commodities as well as equities. So let's just keep an eye on the dollar. We wouldn't want the dollar to start breaking out here. So if the dollar starts to break out, that's not going to be a good sign, and it might put pressure on gold, silver, precious metals, and of course even crude oil. Okay, let's take a look at the VIX. What can we say? VIX is doing what it's supposed to do. Low volatility environment, hanging at the lows here. Let's see if we get if we do get a flush and markets really run hard. That's going to be an opportunity to buy a little volatility just for a dead cat bounce, basically just to spot a move back higher here. And then let's go into gold, silver, and of course crude oil. Now, like I said, gold is a tough call here because gold actually pulled back a little bit yesterday, was up. It is down in the pre-market about $8 right now. I think what's going to happen is gold is going to bull flag, make a higher low from this previous low, and then really start to take off again. We are in a bear market on the monthly chart. That doesn't mean that you can't have ferocious retracement rallies, especially in commodities, which they're so true to the trend. So right now we did break bear symmetry. I don't think I'd be looking to short it. I'd like to see now this get back up in this area, and I'd like to see where this goes. I'm sure there probably will be one more really crazy dip lower, but right now we have seasonal strength coming in for gold and silver, and I like silver even a little bit better. It's basing a little bit better than this chart, if you can see, and I'll show you that. As you can see here, putting in a nicer base than gold. Gold is kind of all over the map. We had a breakout early in the morning around 11 o'clock, and then we came back into this symmetrical triangle here, holding above the 50. So any pullbacks in silver would be okay to accumulate a small position or a position that meets your trading account. Okay, but I do like silver here. Let's take a look at palladium, and as you know, palladium here's the quiet leader. We need palladium to start to move. Once palladium starts to move, then all of the other precious metal stocks will move, and of course commodities. All right, now let's take a look at USO. Really, still no trade here. Needs a lot of work. I like to see one more flush down to 31-ish, 31, 31.50, kind of base like this sort of base happening, and then we broke out. That's what I like to see. And then, of course, the bullish percent break down into the 40-45 percentile. That's what I'm really looking at in gold, in oil right now. Excuse me. All right, so let's go into these the chart segment. I mentioned the Japanese yen, dollar yen, and I get a bunch of emails, so I like to just kind of elaborate. It's a very good. It's a very good thing to understand relationships with correlation with the equity markets. Sometimes the relationships really take hold, and not just several, but many market participants watch what that correlation does, and they react what that correlation obviously does at that moment. And right now, and it's actually has been for at least a couple of years, is the Japanese yen. Okay. There are three safe haven currencies, which would be the Swiss franc, which now is pegged to the euro, so that really isn't a safe haven currency anymore. The U.S. dollar, obviously, and then of course the Japanese yen. I have no idea why market participants think the Japanese yen is a safe haven currency, because Japan is a mess in itself. Obviously, getting better, but I just don't see that. But nonetheless, it's not what I think. It's what the overall market thinks. So, as you can see here, we've been literally going down since, and even before that. I mean, you could just, if I just scroll back, and like I said, this has been going on for at least a couple of years. Look at this downtrend; it's just absolutely crazy. And that's also because the Japanese government is intervening in its currency, devaluing its currency, and and they need to do that with their economy. So by doing that, this is a good gauge of risk on, risk off. Just like we look at the Russell 2000. So this is what I like to see during the day, and you can look at it. You can look at this a couple ways. If you don't have a feed for the Japanese yen, you can look at the FXY, and I can just show this to you real quick. FXY, which is the currency yen trust. It's the ETF. You can follow that, and it follows it one for one. So very easy to follow. Now, if you look at the spiders, right? We take a look from here. Let's just say from October. We've been down ever since, and then you go look at the spiders, and you take a look at, we've been, from October, we've been up, climbing up. So it's totally inversely correlated. But when you have a down day like this, you're going to have an up day, right? And let's just put FXY. Oops, sorry. You're going to have an up day in the Japanese yen. So it's definitely a plus to be looking at what the yen does. Sometimes if the yen spikes lower intraday, you're going to get a big spike and a big move in equities. That's why I like to follow this. It's very important. So keep an eye on it. But right now, okay, so a lot of individuals are saying, hey, we broke this bearish symmetry. Now we're headed to the upside. 1-2 days doesn't make a trend. Even if you wanted to, you can even use let's just go from here, top down approach, and say, okay, even at the 50% retracement, even if it rallied back to the 50% at 96.50, and then starts to roll again, that's quite normal, especially when you have a down move like this. So again, keep an eye on this. Is something that we're going to be looking for in the coming days, to see if yen gets under pressure again, because if it gets back to the 50%, and we get a pullback, because if that means the yen is up at 96.61, that means that equities are selling off, okay? And if that does happen and the yen starts to roll over, that could give you some clues that we may have, a local bottom in place when that does happen, okay? Remember, it hasn't happened yet, just hypothetical, okay? So let's take a look at the ES. Is an hourly chart, and as you can see, I have my 1838 here. I have my 1820. We did break it. We ran back up, and we rallied again yesterday, and now we are up 2.5 in the pre-market session right here. So we could get some follow-through. Now, we did not take out the high from the previous day at sell-off. So that, to me, is something that we need to do absolutely today. Because if we roll back into the inside day, then all it's going to do is going to tell us that it's going to hint that we do have some further downside. Remember, we're still overbought. There's still extreme complacency, so don't rule out the fact that a sell-off can happen at any given moment, okay? That's where your trading plan comes in to say, how much risk do I want to take overnight, okay? So let's go into the spiders. As you can see, beautiful candle back above the 20. So as of right now, everything is status quo. I think we continue the uptrend, okay? 1 day doesn't make a breach. Now, 2 days below the 20 would probably signal a next target will be the 50-day moving average, but that did not happen. We took it right back. We didn't take out the high, But today we take out the high, then more than likely we probably going to challenge the all-time highs. Okay, so let's just keep an eye on that. If you look at all the other indices that I'm showing you, diamonds back above. Diamonds were obviously I think the sell-off was 179 points, so we only got about 115 or 120. Not bad. I'll take it. We're back above the 20, so now we want to actually see if we can start rallying and get outside of this uptrend line and start challenging the highs. Remember, look at the Bollinger Bands. They're starting to pinch, and you can see volatility picking up here. Okay, when there's no volatility, what happens? Small candles, just slow grind. But when you get big volatility, you get big candles as well. That means your ranges are going to be larger, your stops are going to be larger, and you got to trade accordingly to your stops, meaning that you have to adjust your share size. Okay, very important. IYT, transportation sector, inside day. So really, we had an outside day, inside day, outside day, meaning that we had a lower low, and then we took it back up again. Now, the transports are looking very well and actually are stronger than all of the five, and that's what you want to see when you have some good strength and, of course, the leader of the five indices. Here's the Russell, another good gauge of risk, and again, back above the 20, as you can see. And a lot of, I wanted to mention, yesterday, pretty much everything was up across the board, but not significantly higher. What was higher was the Googles, the Apples, the Teslas, BIIB, REGN, some of the big cap biopharmas. The high beta names were moving the markets more than stocks that were trading at, $10, $20, $30, $50, $60. So just, you got to really see what's underneath the hood, and if you're not a trader of high beta names, maybe you might have not done much because of the fact that it really wasn't moving as much as you'd like to see in the sectors that you follow. But it's definitely something to take note of, and following those high tech names and the high beta names is actually definitely help you make decisions during the trading day. All right, so here's the IWM, as you can see, another inside day, but again, we took back most of that loss. That is also a bullish reading. Same thing with the Qs. And Qs did very well yesterday because a lot of big cap tech did well. Right? GLD again, as you can see here, now we're back down, like I said, back down about 780, 880. So is lower from today. So again, that's a good spot if you wanted to look for initiated short. Easy to manage. You'd be outside of that 50-day moving average. But with seasonal strength coming into play, gold being down so much, it's just the recipe just bodes for a retracement rally, and that's why I'm kind of staying away for the short side. But I would like to play that silver long. And here's the XLE again, same thing with this big bearish rising wedge. That's why when we break the first breakdown, you really got to let it sit a couple of days. Trust me, if this thing goes, you're gonna have plenty of time to get short, as you can see here. But right now, obviously, did not happen. So this did trigger, right? It triggered that we are now on a sell signal. Now you got to get an entry, and by doing that and waiting, you saved yourself a stop. So right now, back in the channel, and this actually could start to move again to the upside. Okay, here is the USO. Just like I mentioned, here needs a lot of more work. I'm thinking this thing could flush one more time, then base like this, and then take out the base, and then we could have a nice long entry. Okay, XHB did well. Not a big deal. It had a good run, so it's just consolidating here, making that still consolidating higher low from this previous low. So again, I'd be a buyer on any pullbacks in the builders. Lennar, same thing, holding above the 20. PHM doing the same as well. And again, even if it came back to here, I'd love to buy some PHM in here. PHM is one of my favorites. KBH as well, another great stock, one of my favorites. And if this thing really now, if you're looking to buy pullbacks, right into the 17.20 basically to $18 right in here, I wouldn't want to let it get too far below, and then your stop could be easy to manage right below here, and then you would reevaluate if you got stopped out. But 2014 will be pretty good. Now, the banks reported, yes, they're reporting as we speak, but Wells Fargo and JP Morgan, I think they beat slightly with their revenues were okay. So I think that's a good spot to kind of sell the news. So as you can see, Citibank came in here. Now, Citibank is due to report, I think, at the end of the week. I'd like to see what Citibank does, because if Citibank can actually roll back in here to this 20, I would love to pick up a small position and start looking to manage that. JP Morgan, again, needs to come back in again. Broke the 20. I would probably see this thing profit taking come in and start getting back to the 50 and see where that goes as well. But again, banks and home builders are one of the two sectors. Here's Goldman Sachs. Pretty not much of anything. I like to see this get back to the 50. They'd really get involved. And then, of course, Apple. Now, Apple has news out in the overnight session over the China Mobile that their phones are now being distributed and have a true big demand. So Apple is up now in the pre-market session. So, we'll see what happens. That was actually that bear flag broke, and we had that big candle up, followed through with another big candle, and then now we're still below the 20. But again, if you are a holder of Apple, I'd hold it, wouldn't add to it at the moment. But if it gets back above the 20, then we can obviously challenge the interim highs here of late 2013. So we'll see what happens. All right, guys, getting interesting, definitely for sure. We are a lot of trade opportunities. There's a lot on the watch list that I'm watching. Looking to set up. And again, remember Solars. Solars should be a big play for 2014, as well as the 3D printing stocks. Now, the 3D printing stocks are coming under pressure. A couple of small downgrades with the Triple D, SSYS, XONE. They pre-announced, so it looks like that's going to get hit. The 3D printer stock's going to get hit today. So don't fight it. Let it go. Let it base a little bit. It might be weeks before you get involved. But again, I think that's going to be a hot sector as well for 2014. All right, guys, have a great day. We'll speak to you tomorrow. Take care.